Hello and welcome to this week's episode of Coinscrum Markets. I'm Nisa Amoils. Coming up, CoinList Matthew Jobs Duval looks at the markets this week in crypto RFQ. I'll be speaking to BlockFi founder and CEO Zach Prince. Philip Gradwell from Chainalysis reveals more insights directly from Bitcoin's blockchain. And Tina is joined by Kristen Smith from the Blockchain Association out of Washington, D.C. First, a look at this week's blockchain industry news. The Bitcoin price saw a sharp yet brief sell-off yesterday when 40 Bitcoins that had never been moved since they were first mined back in 2009 were sent to a new address. It's widely assumed most Bitcoins were mined by Satoshi Nakamoto himself at that time, raising concerns that a larger number might suddenly be moved and liquidated. The panic abated, however, when analysts quickly assessed that these particular coins didn't align with certain mining patterns that have previously been attributed to the enigmatic developer. The much anticipated third Bitcoin halving passed by smoothly last week, with the network hash rate falling some 20% in line with expectation, as many old generation mining rigs became uneconomical to operate as the Bitcoin block reward was slashed in half overnight. But with the Bitcoin price bouncing back after an initial fall, the overall impact on the network has so far been minimal. Just as Bitcoin miners adapt to this new normal, Hong Kong-based futures exchange FTX announced the launch of their new hash rate futures contract, hoping to attract business from the $6 billion mining industry as a way for them to hedge their risk. Early signs are positive, with around $1 million of contracts changing hands in the first 24 hours of trading. You may recall back in 2017 when JP Morgan CEO Jamie Dimon called Bitcoin a fraud and threatened to dismiss any member of staff going anywhere near it. This week, however, the bank took an opposite approach and announced that it's to extend banking services to US Bitcoin exchanges, Coinbase and Gemini. The World Economic Forum published a report looking at how the deployment of blockchain-based solutions can address the supply chain inefficiencies and failures that have been exposed by the COVID-19 pandemic. The WEF has also launched a blockchain deployment toolkit to enable smaller players to deploy as well. The toolkit was in development for over a year and saw contributions from more than 100 public and private entities spanning 50 countries. The WEF has found that consumers are demanding a totally new level of transparency now, and the supply chain is rewarded when the transparency and sustainability is there. Finally, hot on the heels of legendary fund manager Paul Tudor Jones' recent announcement to his investors that he'll be buying Bitcoin exposure via CME futures contracts, US-based FalconX announced they're coming out of stealth mode by closing a $17 million seed funding round for their best execution and prime brokerage trading platform, perhaps indicating that their investors, including Avon Ventures, Coinbase Ventures, Lightspeed, and Excel, see the institutionalization of the crypto spot markets as a hot ticket right now. That's the news for this week. Next up, I'll be speaking to CoinList Matthew Job Duval to take a closer look at the markets this week in crypto RFQ.